Yo guys, welcome back to Stock Talk Insider. Today I have a brand new video for you guys. It's been a while, it's been like 45 months, but I'm really glad and happy that I'm back. It's just been a minute, and why was that? Well, I've been moving from another city to the city I live now. So I still live with my parents, but I just moved away from the old neighborhood where I lived and grew up as a kid. And now we are in a city and living over there. So yeah, that's also where I'm making the video right now. So all of that has, taken a lot of time, getting used to all the new things. I'm still doing the same job because I just like and love the job there, what I do. But it was just a lot of, becoming gentle with it and, just normalizing all of the different new things. So that's one of the big reasons I was a little bit, not on the channel. So yeah, that's one of the reasons. And also, I had to focus on the portfolio. I had to focus on normalizing all the new things and going to work and all of that. Also, I had some hobbies I wanted to do, so I didn't actually had the time for the YouTube videos. Maybe here and there I did, but eventually it didn't come true. But eventually we did now. The second reason why I didn't actually had a lot of time was because I also have a second job. That's where I work for myself for my own company. It's a little startup company. It's actually my side job. So it's a company of my own, but it's a side job at this moment. I'm just building it up. What is it? Well, I'm a chef of school degree, so that's what I do, and I love to do some caterings here and there, going to people, cooking for them, and making a nice meal. And making just a nice experience for those people. That's something I do. Maybe interesting to keep that in the description for people who like to see that. It is in Dutch, but maybe you can put a little of the words in English. But yeah, that's my side company that I'm doing. So I also really love that, but I did had to put a little bit of time in that, of course, and that's also a reason why I couldn't really upload on my YouTube channel now. Although I really like to upload on the YouTube channel. But we're already 3 minutes in, so let's get into it. Since it's been a long time, I'm just wanting to make this video really quick, and making clear to you guys that the positions I have now are for the upcoming reasons, and what I'm about to do and what I think of the market at this moment a little bit, and also a little bit about where I will be going, of course. So at this moment I have the stock breakdown. Here are the main stocks I currently hold: Adobe, AMD, LF Beauty, PayPal, SoFi Technologies, Tesla, and that is what it is for now. If you're new here, I've been investing seriously since September 2023, and now I'm proud to say I've crossed over $21,000 in net gains, a big personal milestone. So yeah, let's dive into the portfolio, my thoughts on some key points, and why I'm making a few adjustments now that we're heading into the second half of 2025. These companies each play a unique role in my portfolio, and I explain why I believe in them, plus what recent catalysts might drive them higher or where I might trim back. So, obviously, the last period in the market, let me say it like this: the first half of the year, actually a little bit more until now, so from January till now, has been very bad, and then very, very good. So, stock number one, Adobe. Maybe before we do that, this was a portfolio 4 months ago. I had AMD, Crab, SoFi, and Tesla. I had a total gain of 7,000, but at that moment we were March, and at that moment those total gains would go even lower. So yeah. So Adobe. Adobe remains a strong long-term play for me. With the rise of generative AI, Adobe's Firefly platform and integrations into Photoshop and Premiere continue to set it apart in creative software. They're also aggressively transitioning to AI-enhanced SaaS models, boosting margins and recurring revenue. The recent Q2 earnings showed a double-digit growth in Creative Cloud, and I expect more upside with upcoming product enhancements this fall. AMD. AMD is one of my core AI plays. They've been steadily closing the gap with Nvidia in the AI accelerator space with their MI300 series, which is gaining traction in data centers. They also remain strong in gaming GPUs and high performance computing. Plus, with chip demand from AI, automotive and robotics, AMD is positioned very well to go into 2026, and I really believe that, and I want to make AMD my biggest position, and therefore trim a little bit back on Tesla when I make break-even grounds. Elf Beauty. Elf has been one of my top growth stocks. Well, not since the last video I made, but since the time that I've not been making the videos, of course. I've been making a lot of new structures to the portfolio. Also, that is why I went into the 21,000 in profit. So, Elf Beauty. Elf has been one of my top growth stocks since a month or 3 ago. This brand continues to outperform with strong earnings beats and consistent market share gains in both retail and e-commerce. They're benefiting from Gen Z consumer loyalty and smart TikTok campaigns, and I'm seeing margin expansions along with increased global visibility. Because of that, I've decided to increase my position in Elf, even relocating some capital from other holdings like PayPal. So what I mean with that is I still have PayPal at this moment, but I probably will be selling PayPal, although it's not a big position. I want to make Elf Beauty a bigger position, and therefore sell PayPal and put it in Elf Beauty, and then sell a little bit of Tesla just to trim it, not specifically to put all the money back into stocks like AMD or other ones. Maybe I will do that, but I will still keep half of that trimmed money on the sidelines, and also the money I will be putting in 10 days in the portfolio. So from now on, I'm always putting every month 1,500 in the portfolio. First it was 1,000, now I'm putting 1,500 in it every month. So the 1,500, the 346 that's already in it, then a little bit of Tesla, which I'm not yet really sure about how much, but I really think that I'm too big of a position for Tesla because I have no gains on Tesla. Of course, that's not the reason why I'm selling, just because I think that Tesla is too big of a position for me. If you look at the other positions in capital. So yeah, that's just a position that I was a little bit but it's a little bit too much actually. So that's just an overbought position that I want to trim a little bit to compensate on the other positions. That's just what I mean actually. So yeah, PayPal I will sell for buying Elf Beauty probably, because in the fintech I already have SoFi that I want to keep. So financial fintech is SoFi that I want to keep, and probably sell PayPal, although I really believe in the company. But if you want to talk to me about investing, I probably would rather choose Elf Beauty. Also, I'm young, so you don't have to come to me with but it's probably more of a risk to only invest in Elf Beauty and not PayPal. But I'm young, so I really don't care actually if I lose a little bit of money right now. That's not what I'm saying. It's not saying that I'm gambling, but I believe in Elf Beauty. I know the risks, but I rather risk it in Elf Beauty because I really believe in what they're doing. and they are a very good company. And PayPal, well, they're also a very good company, very good CEO and everything, very good structure. But although I do believe that I'm rather with SoFi in the fintech space, and that when I have between 5 to 8 stocks, I'd rather have SoFi as one fintech company than that I have two fintech companies divided. So I probably put the PayPal money in Elf Beauty to make the position a little bit bigger, and probably put a little bit of money of Tesla in Adobe and AMD. Rest of it I will put aside, just like the 346 that's already there, and the 1500 I probably invest also a little bit around the whole portfolio, but probably half of that I will also keep at the sidelines, and I will do the same with August. And I do think that the market will go a little bit more down in the coming months. And also, I'm not that of an aggressive buyer when it's very high, in my opinion. So yeah. Then we have PayPal. Speaking of PayPal, well, I still believe it's a solid fintech company. I've decided to sell my position. Growth is slowed, and even though they're focusing on cost cutting and innovation, the competition is heating up with Apple Pay, Stripe, and others. I'd rather put the capital into higher growth, higher upside plays like Elf or AMD at this point. Just like I said, I'm young. I'm more interested in doing things like that. It's not me saying that Elf Beauty is a bad stock and it's just going up because it's going up. And also PayPal is staying down because it's staying down. It's just me that Elf Beauty is a very good company and PayPal is also a very good company. But PayPal in stock price is a bit too stable for me right now, and I want to maximize everything. That's why I'm going into Elf Beauty. Also, if you see my AMD position, that's a very advanced company. That's also not really a big risk because their valuation is just ridiculous in how cheap it is. And Elf Beauty is one of the positions I want to make a bet on, but that's also why it's not even $1,000, and advanced and AMD is 17,000. So yeah, that's also a reason. SoFi remains a speculative but strategic position. The company continues to scale its banking segment, and student loan refinancing has picked up again. With rates expected to come down gradually, SoFi could benefit from higher loan volumes, though I'm watching earnings closely this quarter to decide if I'll trim or hold. So I'm on a 50% gain. Some people would say that, well, if you see 50% gain, that's, yes, we won, take it all off. But I do believe that SoFi could be 150% gain. So it could be 15,000 in profit instead of 5,000. So I probably trim a little bit just because, well, that's healthy. And when I want, I could buy a little bit of shares back. But I would have taken my profit for a little bit. But then I'm talking about, well, 50 shares or something like that. It's a little small thing that I would take off. Not too much. Or maybe I wouldn't even take some off. Then we have Tesla. Well, at this moment, the biggest position for me, but as I said, a little bit too big for my concern. And in how big the portfolio is, I do think that the portfolio has put a little bit too money into Tesla position. Not saying that it's a bad company. Tesla is still a conviction hold for me, with FSD version 13 rolling out and progress on Dojo Compute. I think Tesla is more than just an EV company. It's a software and energy company in disguise. There's a lot of noise around delivery numbers, but if autonomy and energy storage ramp up, we could see major upside. I'm holding, but open to trimming if price runs too far ahead of fundamentals. So, portfolio strategy going forward. As we move into the fall, I'm planning on a more defensive setup. While I don't currently see a full market correction on the horizon, there are no major macro shock right now. I do sense a possible dip or mild correction that could happen if Q3 earnings underdeliver or if global tensions escalate like 2018. My plan: start raising some cash by trimming overweight positions, keep an eye on earnings across tech, consumer and banking, be ready to buy the dip if valuations come back to earth. I'm not going all in bearish, just cautious, prepared and tactical. Personal update and lessons. On the personal side, because of my catering business, I had to keep some capital reserved this spring just in case something went wrong operationally. That meant I couldn't scale into certain positions as much as I wanted back in March, April or May when the market was down. Honestly, I probably missed out on some extra upside, but I'm glad I played it safe. Business come first, and you have to balance entrepreneurship with investing. Still, crossing over 21,000 in net gains is under 2 years feels really rewarding. So that's where things stand today. A solid portfolio, a plan for the months ahead, and more focus on strategic moves. I really should get some water when I record these videos. Let me know in the comments what are your top picks right now. Are you going more into cash like I am, or staying fully invested? If you got value from this video, please give it a like, subscribe, leave a comment if you want. I'm always curious to what you people think. And well, that's it. Thank you for watching the video. And this week is earnings week. Next week is also earnings week. And then we still only have Adobe in September. So very interested in all of those things. Let me know if you have to say something. And that's it. Bye bye.